Ladies and gentlemen, good day, and welcome to the Unominda Limited Q3 FY earnings conference call. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sunil Bohra, Group CFO of Unominda Limited. Thank you, and over to you, sir.
Thanks, Mike. Good evening, everyone, and a warm welcome to all the participants. On the earnings call today, I am joined by my colleague, Ankur Modi. We have uploaded our financial results and investor presentation for Q3 FY on the stock exchanges and our company's website. We hope everybody had an opportunity to go through the same. I will first start with industry updates and overview, followed by our financial and operational performance for the Q3 and 9 months of the current fiscal. Post that, we will open the floor for Q&A. Starting with industry update, India continues to be one of the world's fastest growing economies due to estimated high domestic growth supported by export opportunities on the back of India becoming a manufacturing hub and various government initiatives to encourage Make in India. The automobile industry, specifically PV segment, is also on a growth trajectory supported by robust demand in both urban and rural sector. Cool off in metal prices and shortages of semiconductor chips subsiding. According to SIAM, for the first time, India has surpassed Japan in auto sales and become the world's third largest auto market, underlining both India's credentials as the fastest growing economy in general and the potential of the auto sector in particular. Considering the Indian automobile industry contributes 7.1% of India's GDP and 49% of its manufacturing GDP, calibrated steps are taken to maintain the steady industry growth trajectory and realize in the industry's true potential. During the quarter, we saw highest retail sales in October and November in the history of Indian automobile industry. The demand was well supported initially by festival sales, followed by a great Indian wedding season. After 2 months of adrenaline rush, December 22 was relatively lull due to calendar year and with routine price hikes from OEMs. In terms of production, we witnessed healthy growth in overall industry volumes during the quarter. PV, three-wheeler and CV grew by 21, 13 and 12% respectively YOY basis, while two-wheeler recorded a growth of near 1%. Production volumes declined on quarter-on-quarter basis due to early festival. The related growth was captured in Q2 FY itself. Production volumes were also impacted due to planned annual maintenance shutdown at most of the major OEMs. Now talking about the segment-wise performance, the PV segment has continued to show remarkable consistency in growth during the entire year. PV segment continued to break all records by clocking more than 34 lakh retail sales in calendar year 22. PV production volumes are likely to cross pre-pandemic level and record highest ever annual volumes. Better availability of model mixes, new launches, and increase in rural demand continues to keep the segment in healthy growth trajectory. Increase in the standard of living has led to a rise in the need for premiumization. India has seen a robust year-on-year growth in luxury car sales in CY 22, which reflects the growing appetite for luxury cars and goods in a post-pandemic world. Compact SUV and SUV category, coupled with higher variant models, continues to rule, while entry-level subsegment is still feeling the pinch. Apart from this, while waiting period for some models have come down, compact SUVs and luxury vehicles continue to witness a minimum waiting of 2 to 3 months. The demand for both ICE and EV variants remains strong across segments, accompanied by continuous investments in R&D. Our focus on localization remains intact, and we have been able to increase the wallet share among customers across variants. Speaking of the two-wheeler segment, the two-wheeler industry saw improved sentiments during the festive and wedding season during the quarter under review, but it could not sustain and continues to face headwinds with industry volumes still below the peak pre-COVID levels. While sentiments are improving at snail's pace and are better than what it was a year ago, rural market is yet to fully come to the party as the cost of ownership has shot up. The trend is specifically observed for the entry-level commuter segment two-wheelers, implying that the purchasing power of the consumers at the bottom end of the pyramid has been impacted. Two-wheeler exports have also remained under pressure. Near-term challenges persist for two-wheeler, however, medium to long-term outlook remains positive. The three-wheeler segment continued to the recovery path with robust growth. The three-wheeler segment, which was completely down during COVID, has recovered well and has narrowed its gap when compared to CY 2019. Within the segment, it's the electric rickshaw sub-segment which is showing triple-digit growth, thus pushing the EV market share above 50% mark. The CV segment has continued to grow during the entire calendar year 22 and is about to reach the pre-pandemic levels due to rise in e-commerce, agriculture, infrastructure, mining activities, improving sentiments of fleet owners, replacement of fleet, and the new model launches. The government's ongoing push for infrastructure development, coupled with the increase in demand for LCV, HCV, buses, and construction equipment, has kept this sector's growth momentum. The Budget 23 had proposed that custom duty exemption is extended for import of capital goods and machinery required to manufacture lithium-ion cells for batteries used in EVs. This will provide impetus to green mobility and boost local manufacturing. In addition, funds will be allocated for the central government to scrap old vehicles under the vehicle scrapping policy as prescribed earlier. States will also receive assistance in replacing old vehicles and ambulances. Apart from this, the capital outlay of over 10 lakh crore for infrastructure spending will help aid CV sales, which is already witnessing an upswing. The Union Budget 23 also raises the personal income tax rebate limit from 5 to 7 lakhs. This is likely to provide more disposable income. With such initiatives, we are hopeful of a continued surge in demand for auto industry. Moving to Auto Expo Components 2023, Unominda recently participated in Auto Expo, which is Asia's largest automotive show. We were present in the expo, showcasing our formidable product portfolio built around mega trends of personalization, autonomous, connected, and electrified. Personalization was showcased as affordable luxury. The key technologies in lighting, seating, acoustics, and smartphone were integrated to showcase what an Indian customer can expect in his or her car. Autonomous was exhibited by considering Indian driving condition, hence it revolved around driver assistance system and driver behavior monitoring. Connected as connected platform to collect, control, monitor, and monetize vehicles data. Electrification. Unominda has been convincing present in the EV technology across segments with charging and powertrain solutions. The above technologies developed by Unominda were very well showcased in the three technology demonstrators of two-wheeler, three-wheeler, and a four-wheeler respectively to give a real-time experience to. Besides the product exhibits, Unominda also showcased new technologies we are working on. We saw overwhelming response at our stall with visits from leading OEMs, media, investors, and other stakeholders. We gave an enthralling experience of our futuristic products and technologies, live technology demonstrators to visitors. Moving to key operational slides, you may refer to slide number 5. As was approved by the board, the company executed the joint venture agreement with Buller Motors and Tachi S during the quarter. We are happy to inform the company also received confirmed orders from a couple of two-wheeler EV OEMs for motors in the newly formed joint venture with Buller Motors. The company has also entered into technical licensing agreement with Ascentech Company of Korea, a leading global supplier of automotive sensors and actuators, to design, develop, manufacture, and market high-tech wheel speed sensors in India. Unominda had set up separate division for automotive sensors few years back, considering the rising demand of the evolving technology in sensor space. Sensor division has come a long way since its inception with manufacturing of engine and exhaust sensors, transmission and suspension sensors, active safety and comfort sensors, among others. The current partnership with Ascentech will further strengthen its advanced sensors product portfolio. Unominda EV also won incremental order with annual peak value of 300 crores, comprising of off-board charger, motor controller, BMS, and DC-DC converters. The company strengthened relationship with marquee American two-wheeler OEM with incremental orders for switches as well as rigid grips. Coming to a financial and operational performance, you can refer to slide 7 and 8. At consolidated level, revenue from operation for the quarter increased by 34% year-on-year basis to 2,915 crores from 2,181 crores in Q3 of FY22. While revenues grow marginally as well on quarter-on-quarter basis as the company continues to gain market share and increase its kit value. We have witnessed growth amongst all our products with lighting and PV alloy wheels registering phenomenal growth. As guided, we have continued to outperform the industry with our 34% growth against industry volume growth of 5% on year-on-year basis. Even quarter-on-quarter basis, while industry volumes have declined by 16%, Unominda has registered growth, despite softening of some commodity prices impacting revenues negatively. EBITDA for the quarter was at 338 crores, improving by 44% from 235 crores year-on-year basis. The EBITDA margins for the current quarter has improved to 11.6% as against 10.8% in corresponding quarter last year. Operating leverage supported by increased volumes has led to margin expansion. However, higher energy costs and inflationary impact on other administrative expenses had constrained further margin expansion. Finance costs have remained stable at 13 crore in comparison to corresponding quarter last year in spite of rising interest rate scenario. Sequential drop in finance cost is mainly on account of hedge accounting on the unhedged portion of the foreign currency loan. We see increase in tax expenses from 42 crore in Q3 FY22 to 62 crore in Q3 FY23 on account of higher profits. Sequentially, increase in tax from 55 to 66 crore is mainly on account of reversal of some deferred tax liability in Unominda Europe and some timing differences. The profit after tax, which is Unominda's share for the quarter, was at 162 crore as against 101 crore in Q3 FY22, registering a growth of 60% on a year-on-year basis. Coming to the business segment-wise performance, moving to product lines, starting with switching systems, you can refer to slide number 13. The segment achieved revenues of 815 crore for Q3 FY23, contributing 28% of our consolidated revenues. Premiumization, leading to increased numbers of switches, continue to drive the business growth along with increasing share of business with Indian and Korean customers. During the quarter, we received incremental orders from Korean customer, further strengthening the relationship. In two-wheeler switch business as well, we have won incremental export orders for switches and heated grips from the two-wheeler American OEM. We have also commenced construction of our expansion of four-wheeler switch plants at Chennai and Farrukhnagar. Moving to lighting business, it has achieved revenue of 644 crores for Q3, contributing 22% of our consolidated revenues. Lighting business has grown exponentially over last year with multiple large order wins, specifically for four-wheeler lighting. Four-wheeler lighting Gujarat plant had commissioned last quarter and is ramping up in subsequent quarters. Moving to our casting business, it has achieved revenues of 579 crores for Q3, contributing to 20% of our consolidated revenues. The revenues for casting business has been increasing year-on-year basis with increase in capacity of four-wheeler alloy wheel and commissioning of two-wheeler alloy wheel plant. Last quarter, underlying volumes of both two and four-wheeler had declined quarter-on-quarter basis, along with reduction in commodity price impacting the revenue for the quarter. We continue to be bullish on the casting business and expect recovery in volumes as well as higher penetrations to lead significant revenue growth in subsequent quarters. Moving to acoustics, slide number 14. Our acoustic business had achieved revenues of 187 crores for Q3, contributing 6% of our consolidated revenues. While India business remains stable, European subsidiary Clarton Horn remained under pressure with unprecedented increase in energy costs and lower industry volumes. Moving to our seating business, which achieved revenues of 263 crore for Q3, contributing 9% of our consolidated revenues. Revival in CV segment and diversification in customers supported the growth in seating business. Export of suspended seats were marginally impacted due to ongoing geopolitical issues. Seating business won order from a new two-wheeler EV OEM customer. Moving to other product businesses, we have achieved revenues of 427 crores for Q3 FY23, contributing 12% of overall top line. Other businesses mainly comprise of controller and sensors, ADAS, blow molding business, erstwhile ICIS, battery and aftermarket. Growth in other revenues can be attributed to blow molding business on commission of the Bangalore expansion, our engineering services business in Europe and aftermarket. The share of profit loss of associate joint ventures for Q3 is at 25 crore as against 19 crore in Q3 FY22. While all our JV associates contributed positively, major contribution came from Denso 10, Roki and TG. Moving to EV business, during the quarter, we have received incremental orders of off-board charger, motor controller, BMS and DC-DC converter from two-wheeler EV OEMs. As was guided, we have now received orders for motors as well in our new formed JV with Buller Motors. The annual peak value of these orders is expected to be around 300 crores. We would also like to inform you that Unominda EV System, our JV with Frivo, has started supplies of off-board charger for two-wheeler EV OEM at interim location through final assembly and testing with SOP for 3 more orders lined up in next 6 months. Moving to aftermarket and exports, refer to slide number 14. In terms of our revenue pie for the quarter ended December 31, OEM business accounted for 89% and aftermarket business at around 11%. Our aftermarket division revenues were at 286 crores as against 262 crore in corresponding quarter last year. Aftermarket revenues have grown 9% YOY basis and 11% sequentially. The aftermarket continues to grow at healthy run rate with increased focus and marketing effort. Moving to our cash flows and debt levels, our net debt as of 31st December was at 683 crore compared to 570 crore as on March 31, 22. And our net debt to equity stands at 0.16. Net debt has increased marginally on account of increased working capital borrowings, consequent increase in revenues, as well as due to some incremental borrowings for capital expenditure. We have also been making steady improvement in ROCE. If we analyze profitability of 9 months, our ROCE stood at 20.8%, which is highest in last 3 years. Moving to dividend, the board has approved and declared interim dividend of rupees 0.5 per share, which is 25% of face value, reflecting commitment from the company to returning value to shareholders on consistent basis. The dividend amount in absolute value will be double the amount paid as interim dividend in FY 21-22. Moving to some strategic business updates, starting with Minda Kosai Aluminium. The company continues to identify opportunities for further consolidation and simplifying the group structure, thereby creating enhanced stakeholders or shareholder value. In pursuit of the same, the board of the company has approved acquiring remaining stake in Minda Kosai Aluminium, which is 22.64%, currently held by JV partner Kosai, to make Minda Kosai Aluminium a wholly owned subsidiary. The purchase consideration for 22.64% stake is agreed at rupees 115.5 crores. Post-acquisition, while JV for MKI will be terminated, the company will enter into technical licensing with Kosai to ensure continuity of technology support. The transaction is targeted to be completed on or before 31st of March 23. The TG Minda business, which is a joint venture between Unominda and TG Japan, engaged in business of automotive safety system, fuel cap, weather strips, sealing parts, is planning to enhance the production capacity at its main plant, which is in Nimrana, to meet the growing demand for airbags as safety regulations become stricter in India. Driver and passenger side airbags for frontal collisions are increasingly equipped on vehicles in India. The use of side and curtain airbags to protect vehicle occupants in side collisions is also being made mandatory. In fact, the company has already received large orders for curtain airbags for 3 models from one of the Japanese OEM. To meet the accompanying growth in demand, TG Minda India will expand its Nimrana plant and install airbag production equipments. The board has approved capital expenditure of 175 crore for the said expansion. The commercial production of the expansion is expected to start from December of 2024. Moving to some recognitions and awards. At Unominda, it has been our constant endeavor to incorporate, demonstrate, and live up to the highest standards of corporate ethos and governance in all our policies and practices for all and inclusive growth. We are happy and proud to state that Unominda has been honored with the Certificate of Recognition for Excellence in Corporate Governance in the category of listed medium corporates at the 22nd Annual Institute of Company Secretaries of India National Awards for Excellence in Corporate Governance 2022. Unominda is an employee-centric organization, always puts our people at the heart of whatever we do. At Unominda, we believe the success of the organization and its people go hand in hand. Recognizing our people practices, Unominda was recognized as Great Place to Work by GPW Institute India for second consecutive year. We also featured in amongst top 25 best workplaces in manufacturing companies in India for 2023 for inspiring trust among people, instilling pride, creating an environment that promotes camaraderie and delivering a great workplace experience for all our employees. Beyond business, we are strategically focused on reaching large number of people in the community and providing more opportunities for holistic development, thus achieving responsible growth by shaping the lives of individuals through new possibilities. There are numerous initiatives which our charitable foundation undertakes to enhance underprivileged people's lives. Recognizing our effort in CSR field, we won prestigious awards such as the Green Tech Award and the CSR Times Award, which is a gold award in the category of promotion of education at the 9th Annual Green Tech CSR India Awards 2022, and for the project Samarth Jyoti in the category for women empowerment at the 9th Corporate Social Responsibility Summit respectively. With this, I would like to now open up the floor for questions.
Thank you. We will now begin the question and answer session. Participants who wish to ask a question may press star and one on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. We have the first question on the line of Siddharth Bera from Nomura. Please go ahead.
Yes, sir. Thanks for the opportunity and congrats on a good set of numbers. So my first question is on the switch side. So if
Siddharth, the lines is not very clear actually.
So Siddharth, request you to kindly go off the speakerphone and speak to the microphone.
Yeah, is it better now?
Slightly better. If you could go off the speakerphone, it will be better.
Yeah, I'm directly talking from the phone only.
All right.
So, sir, on the switch business, I just wanted to understand that if you look at production and as you have highlighted, industry volumes are down on a sequential basis in maybe double digits, and we have managed to grow the business sequentially. So just wanted to understand here first, any particular new orders which have started or what has led to this performance in this segment?
Okay, that's one. Any other questions, Siddharth?
Yes, I have a couple of them. So I'll just go ahead with my questions. So the second question will be, sir, on this EV side, so we have said about 3 billion new orders, but we had earlier also said about, I think, 4.5 billion orders in the initial part of the year. So if you can just help us understand how to look at the revenue ramp up, what is the total order book as of now, currently, and how to understand the ramp up in the next couple of years. And third is on the COSAI business. I mean, we saw that it has been acquired at quite an attractive valuation. So just wanted to understand more why COSAI sort of agreed to sort of sell off their stake now, and what happens if later. I mean, I understand we have a TLA, but just in case, how to understand the business ramp up scope going ahead for this. These are the initial ones. I have more. I'll come back later in the queue.
Okay. Thanks for that. So, switch business, industry volumes are down, and how we managed to grow. I think this has been a constant endeavor, Siddharth, if you remember that how we are increasing our kit value with that side stand switch, etc., where we have been the leaders. So definitely that has added. There has been some addition in the kit value, and also this export from the American two-wheeler OEMs, and increasing our share of business with some of our customers which we have been speaking. I think all of these actions have played their role in terms of achieving the kind of numbers which you have delivered despite the industry degrowth. That's on the switch business. In terms of EV side, 3 billion new orders and earlier 4.5 billion. How to look at revenue ramp up? So this is all incremental orders, and these are all what we always say, it's annualized peak volumes, and we expect these volumes to be kicking in from FY25, FY6 range in terms of the annual numbers. Then COSAI, why sell off now, attractive valuation and business ramp up scope. So this was a specific request from our JV partner, not that we were not interested. Obviously, we were also interested, but they were also maybe having some requirement for funds. So it was a mutual discussion and mutual negotiation in terms of arriving at this value. Definitely, it's attractive, and I'm sure it's much accretive to the shareholders of Unominda Limited. In terms of business ramp-up scope, it goes unhindered, because even today, the business was completely run by Unominda with the sort of a technical support wherever required from COSAI Japan, and that model will continue. So we will enter into a TLA for roughly around 10 years once we terminate this JVA. So there will be consistency of the support, whatever we have been getting, which will be compensated through the royalty to the COSAI, which will continue as it has been now. So this is the broad structure, and while board has given us a timeline of 31st of March 2023 to sort of discuss and agree on the path forward as in terms of agreeing on to the technical licensing model and what will be the intricacies of that going forward. So just to make sure that the growth of the business is not compromised, and in fact, we maybe put up the business at a faster growth pedestal because now it's fully our baby, and we can even go a little more aggressively if need be.
Got it. So, sir, just a clarification on this switch side, you said we were sort of wrapping up this US two-wheeler switch. So that has come in the current quarter only, Q3 only, or it is the order which we have got and will come up later?
No, it has been there for last 9 months now, but obviously the volumes have been improving. So that also helps on month-on-month basis. And as I said, there have been some incremental orders which you have received that also will kick in the current calendar year.
Got it. And what will be the size of these orders, sir? The Korean four-wheeler switch and US two-wheeler switch?
So, Korean four-wheeler switch, while the number may not excite you, it is 40 crores annually. But if you see from business perspective and a strategic point, it's sizable. Considering the Minda Rica revenue itself is like 900 to 1,000 crore, is almost 4-5% of the revenue incrementally, and it will help us increase our share of business in the Korean with the Korean customers, which what we have been discussing for quite some time now.
Got it. Thanks a lot, sir. I'll come back in the queue.
Thank you, Siddharth.
Thank you. We have the next question on the line of Ashutosh Tiwari from Equirus Securities. Please go ahead.
Yeah, hi, sir. Firstly, congrats on good numbers. This on this COSAI, you mentioned that royalty, which is already we are paying, only that will continue after TLA as well. There is no increase in that.
No. That's what I said, that the current mechanism of compensating for technical support will continue. Only thing is, as of now, it is through a JVA. So JVA will have to be terminated, and we will need to enter that into a TLA. So our principal agreement has been that the same terms should continue, though we will sit across the table and make sure that the support services, whatever we have been getting on case-to-case basis, that continues, and there should be zero impact on that. And in terms of timeline, as I said, we will target to close in next 2 months.
And you mentioned on this electric two-wheeler orders, almost 800-900 crores we have won so far that you declared in Q1 in this quarter. That all will peak out in 25. Is that correct?
Yes, right in 25-26, that time frame. Based on and this is based on the volumes carried by the customers. Now, obviously, it can be earlier, it can be later, based on the industry adaptation of the EV.
Okay. And what was the revenue from this two-wheeler and four-wheeler alloy wheels in this quarter?
So two-wheeler, four-wheeler alloy wheel volume has definitely been impacted compared to the last quarter. So two-wheeler volume has been significantly lower. So the commodity price itself impacted almost like 30 crores of 35 crores of revenue in this division in the last quarter versus Q2. On top of it, the volumes, have been lower in primarily the two-wheeler business. So put together, if I see two-wheeler and you said four-wheeler alloy wheel, right?
Yeah, separately, yeah.
Oh, 1 sec. Yeah, so both put together is roughly around 400 crore for the quarter.
And so can we get it individually in two-wheeler and four-wheeler?
Can we leave it? Don't mind.
Sure. And lastly, two more questions. One is that this TG Minda CapEx of 175 crores, what kind of sales it can generate for us?
So this can generate sales of almost 350 crores a year.
2x asset turn, okay.
Yeah.
And lastly, on the margin side, because we, like I mentioned, that gas prices have remained high, probably you not got compensation from OEMs. So can we get the direction from Q4 and also margin can improve further from here?
So we have been honestly two things discussing consistently with our customers for compensating the gas price. Though we have been getting positive years, but it has to yet get concluded. That's number one. Number two, in terms of margin, I would say yes, it will definitely have an impact on a quarter-to-quarter basis. But we have been guiding for a margin on an annual basis. So we still hold on to that margin range of 11-12%. And if you see first 9 months, we are within that range only. So even if we get that, hopefully maybe we a little above the average what we have done so far.
Sure. Thanks a lot.
Thank you for that question.
Thank you. We have the next question on the line of Mukesh Saraf from Avendus Spark. Please go ahead.
Yes, sir. Good evening, and thank you for the opportunity. My first question is on the alloy wheels business. You've obviously mentioned that the revenues are down also because the pricing has come off as the material cost has come off. Is there an under recovery that we have seen? I mean, has the pricing come off only to the extent of how our costs have come down on the RM side, or is there an under recovery there, sir?
So this is down is primarily what we are talking, Mukesh, is the aluminum prices only, nothing else.
Yeah. I'm asking you regarding the aluminum prices. So, have our costs also come down to that extent, to the same extent as the pricing?
Yeah, absolutely, Mukesh. So with obviously a little bit of lag. So like some customer, it is we have got now monthly price adjustment. Somewhere it is quarterly. So customer to customer, it does get impacted. So somewhere it would have got in Q3, somewhere it will get in Q4.
Okay. So it hasn't really. I mean, our margins in terms of per ton have been still maintained. Is what you're saying?
Yeah, absolute margins per ton, as I said, has been impacted primarily because of the gas prices. Had that not been there, it would have been definitely much better.
Right. Got that. And secondly, on in the other segment, you mentioned that blow molding has been one of the reasons why the growth is quite strong sequentially. So does it mean that the Bangalore facility is already up and running? Is that right?
Yeah, Bangalore facility is up and running.
The new one.
Yeah.
Okay. Because it was expected to start, I think, in the fourth quarter, if I'm not wrong. So, but it's already started there?
Yeah, it has just started and also started supplying because the key business what we have got was for the new model of one of our Japanese OEM, which has started getting into SOP in December.
Okay. And so that's the primary driver of that other segment going up. So the reason I'm asking is...
no, other segment, there has been a lot of improvement. I won't say that's the primary driver, honestly, Mukesh, because a lot of other businesses like sensors have done well, controllers have done well.
Right.
So there are, I think a lot of them who are chipping in, and I won't say it's entirely because of one business.
Okay. Well, it's quite a strong growth there sequentially. So could you just highlight if or if you could probably give a sense on what could be, say, if at all the EV revenues that we have so far? I think last time you had mentioned that you'll probably give that number later. So is there some color you can give there?
Yeah. So that number maybe we'll start reporting from the next fiscal. Let the numbers be a little more meaningful. As of now, I think just 3-4% in terms of the EV number. So, and our two-wheeler revenue is also less than half. So from that perspective, it won't make a significant impact. So maybe from first quarter onward, we'll evaluate if we start giving purely EV numbers separately.
Sure.
In terms of.
Right. And just lastly, any color on the CapEx that we plan for the upcoming year, F24, and if you could just broadly give a breakup of that CapEx across the years? So
that maybe we, as you said, normally Mukesh, we update in the annual, along with the annual, we just started our budgeting cycle, and entire February and March actually goes into our budgeting, planning, etc., capital allocation and all that. So we will have better visibility in when we speak about with our annual results.
Right. All right, sir. Thank you so much. I'll get back to you.
Thank you, Mukesh.
Thank you. We have the next question from the line of Aditya Jhawar from Investec. Please go ahead.
Yeah. Thanks for the opportunity and congrats on good set of numbers. Few questions. Number one on airbags.
Sorry?
Airbags. First question is on airbags. The incremental change, that is, the mandatory 6 airbags. So what kind of incremental opportunity are we seeing in this?
Yeah. So as I said, the incremental opportunity, which is almost the confirmed orders in hand, is all more than around 350 crores. Okay. And that is why we are expanding these facilities. Some of it we can achieve through our existing capacities, but definitely it will need a lot of investment, because the kind of facilities we have for airbags, I'm sure you would have seen when we had a visit to a Gujarat plant. It's a very, very high-tech plant in terms of airbag manufacturing with automated cutting, stitching, etc., a lot of things. So they are highly automated machines, and that's why we need this kind of capex to achieve those business.
Okay. So this, facility would be ready in December 24, but this is becoming mandatory from October 23, and our largest customer has a large portfolio dependent on the entry segment car. So do you foresee that we would be losing market share in the first initial couple of years?
I won't comment on market share, Aditya, as of now, because while we all know the current date is October, I think a lot of water there still need to flow under the bridge.
Okay.
So as of now, whatever guidance we have got from customers, we are working based on that. So I'm sure it will not impact our share of business, because whatever models they are associated, airbags are associated, these are the timelines given to us by our customers. In case customer asks us to prepone, we'll be happy to do that, because it's not that we will need 2 years to set up this equipment and start supplying. In case they want 6 months earlier, we will be able to do that with some sort of a preponement. But as of now, the December 24 timeline is what we have been given by our customers linked to the SOP of their models.
Okay, perfect. And on the gross margin front, this quarter we saw a very good expansion. So if you could help us understand that, what is the benefit of lower RM price? Was there a lag effect of a price escalation, and what could be the contribution of product mix change? And is there some price escalation pending which can accrue in Q4?
So, Aditya, is a very good point. And in fact, this is what you remember we have been discussing when the commodity prices were going up. So there is always a quarter lag impact. So when prices were going up, we were seeing some sort of a negative impact. So now when prices are going down, obviously there is some positive factor which is coming in Q3, but it may not be what you call forever, because once you go into Q4 and buy spot prices, then you get the Q3 prices. And that is the reason why we talk of the annual margin guidance range rather than looking at quarter to quarter. And second, whether it will have any, you said long-term impact, answer to that is no, because when we say the commodity price indexation is aligned with almost all our customers, with 95% of commodities being indexed. So while you might have some quarter-to-quarter movement, but on an annual basis, things get passed through to our customers. So from that perspective, we have tried to insulate the business from the volatilities of the commodity.
Okay. And is there, Sunil, some impact of, product mix change that you can quantify?
Product mix change.
Segment change, for example, switches, lighting. Any comment on?
So not, if you see the segment volumes, Aditya, I don't see there is any significant structural shift which is happening in our what we call volumes.
Okay, fair enough. Now, a couple of just bookkeeping questions. So this EV revenue now will be accounted in two entities, that is Unominda EV Systems, as well as this JV we have for traction motor with Buller, right?
No, EV revenue, yes. So there will be three places actually. So as of now, you are right that motors for two-wheeler will go into Buller. Yeah. EV components which are part of the JV will go there, but there are some products which are not part of JV, like there are some EV component for CVs. There are EV products like telematics, things like that. They are part of the controller division. So you will have actually the EV revenue coming into, and this is for only EV specific products, I assume you are talking. Otherwise, right, all the other products will get accounted where they are.
Yeah, EV specific products only.
Yeah. So it will be three places, not two.
Okay. And just can you please repeat the net debt number?
So our net debt number for Q3, right? Or so Q3 was 683 crore. On 31st of December. It's a net debt.
Perfect. That's it. All the best. Okay.
Thank you, Aditya.
Thank you. We have the next question on the line of M. Mandilsha from MK Global. Please go ahead.
Hi, sir. Mumuksh here. Congratulations on good quarter and thanks for giving the opportunity, sir.
Thank
sir,
you.
If possible, can you share the others revenue breakup as it has gone up 20% Q-on-Q? Some of the key growth drivers there.
So can this be taken offline with Ankur if you don't mind in terms of the data for modeling?
Sure. I'll take that. So sequentially, other expenses have also gone up by 11% versus 11% revenue growth. What led to the increase, sir?
Yeah. So in others, as I said, there are 2-3 key factors at play. One is the consumable, which is the gas price. Then other is in the last quarter, you have this annual maintenance shutdown. So there are some shutdown expenses which come there. Plus with the opening of the economy, the travel has kicked in. So this advantage which was there maybe a year back or so. So obviously some of those, the costs are as expected coming back in the system. So these are I think 3 or 4 key reasons why the other expenses are higher.
Right. And so then sequentially ahead, how do you see the gas prices, sir?
So gas prices in terms of the major businesses where we are consuming is in the casting and also in Europe. We are not seeing any signs of softening as of now.
So at the Auto Component Expo, you showcase the camera-based systems and already company has won orders. Can you share some medium-term plans or targets for this camera-based systems or the area of autonomous, sir?
Yeah, so we are working to set up a camera manufacturing line because we have got already a short business for more than 200 crores for camera. So this is the currently we are working on to set up the project for camera manufacturing. In terms of the autonomous, there are a lot of products which we are working in terms of ADAS. So as of now, what you have got assured business and which is supplying is primarily towards your sensors, your rear view cameras, your buzzers, etc., the RPAS system, etc. This is what currently we are doing, but there are a lot of new technologies we are working. As you said, we have rightly mentioned that we are showcased in our expo. So obviously these things takes time to get traction. Good thing is that we have got a very good feedback from our customers and the engagement has started. But as you know that the engagement to getting business also is a couple of years journey which we have to live through.
Right, sir. Thank you so much for the opportunity, sir.
Thank you, Mumuksh.
We have the next question on the line of Nishit Jalan from Axis Capital. Please go ahead.
Yeah, hi, sir. Many congratulations on good set of numbers. I have three questions. Firstly, in the LMT segment, I think you mentioned 400 crores of revenues from alloy wheels. So, seems like our casting business has scaled up very significantly, right? I assume the number was closer to 100 crores per quarter earlier, so some color on that. Secondly, on the TV Minda CapEx expansion and the CapEx of 175 crores, what kind of top line can we get at full capacity utilization in that plant? I just wanted to understand the kind of ramp up we can see. And thirdly, if you can just guide us for the overall CapEx and investments that we are planning to do in FY23 and FY24, because obviously we are seeing a lot of growth and a lot of new plants are coming up, plus we are buying stake in a couple of the subsidiaries also. So just wanted an update on that. Thank you so much.
Thanks, Nishit. So in terms of LMT segment, you asked that we have done very good revenue in casting segment. Can you just be little elaborative on that? What do you mean by that?
So in LMT, your total revenue was 580 crores, right? And your alloy wheel revenues you mentioned was about 400 odd crores.
Okay.
So I assume the remaining is the aluminum die casting revenues?
Mm-hmm.
So just wanted to understand it seems like the aluminum die casting revenues was around 180 crores in this quarter. And what I understand was the run rate in the previous quarters was closer to 100 odd crores. So just wanted to understand, is that correct? And what has led to such kind of a strong ramp up? And if you can share alloy wheel numbers for the 9 months also, that will be helpful.
So I don't have that number available. Can you help him?
Yeah, sure. This is from Karthik. I'll come back to you.
Sure, no worries.
Then TG Minda, 175 crore capex, how much of top line can we do? I think I answered to somebody else similar question. We are expecting to add at least 350 crore of additional revenue from this capex. And overall capex and investment for FY24 also, I think we spoke little while back that maybe we can give you a better number visibility in when we speak about with our annual results, because we just started our budgeting exercise and we should be over by end of March, because it's a long process for us with multiple businesses. It takes almost like roughly 6 weeks from start to end. We just started that process. So hopefully when we interact next time, we should give you a better visibility in terms of what is the capex going to be for FY24.
Okay, thank you.
Thank you, sir.
Thank you. We have the next question on the line of Rishi Vora from Kotak Securities. Please go ahead.
Hello, sir. Thank you for taking my question and congratulations on good set of numbers.
Thank you.
First one is, sir, alloy wheel. So how should we think about, Kosai Minda JV? So will it continue, or over the next, few quarters, we should also look at some consolidation happening in that JV? Secondly, in this quarter, we have set up two, full volume subsidiaries on the auto component side. Can you give us some color on what it is pertaining to? And thirdly, on TG Minda, well, you have announced a capex of 175 crores. So it's completely borne by the company, or it would be split between Toyota Gosai and Unominda? And lastly, sir, just capex and investment numbers for FY23, if you could guide us, that would be helpful. Thank you.
Yeah. So in terms of Rishi starting one serialized, so alloy wheel, as we said, the Kosai Minda JV obviously will get terminated and will get into a technical licensing agreement. Even today, we are sort of having the services only on a lead-based requirement, whatever for any support we need. So that will continue. And the same kind of setup what we have in form of JV will get translated into a TLA. Only thing is they will not have equity partnership. Otherwise, whatever technical support we are getting, that will continue. And whether this JV will consolidate or no, I can't comment today, but we will note your suggestion in terms of further simplifying the structure, because once it becomes 100% subsidiary, I think that's a good suggestion that we look at appropriate time in future. The two wholly owned subsidiaries, they are more of enabling things. As you remember, even last time when we have opened two subsidiaries which we have got registered into our PLI scheme. So this is more a groundwork which we do have a couple of entities ready for any potential such opportunity or a potential JV for which we might need. But as of now, there is not going to be any operations in these two entities. The TG Minda CapEx is going to be fully funded by the company through a mix of debt and equity. There is not going to be any equity infusion either by TG or by Unominda. And last CapEx FY23, I think numbers which you guided last quarter, that remains of around 600 odd crore, 600 to 700 crore kind of a CapEx for FY23. And just to sort of update you, the TG Minda CapEx which we will do, that will not appear into our CapEx, because the CapEx guidance which we give, that is what we see in the consolidated financials, and TG is not consolidated, it is accounted as a JV and associate. So this CapEx will not figure in our annual CapEx.
Okay. Thank you so much for it. Thank you.
Thank you.
Thank you. We have the next question from the line of Karan Kokane from Ambit Capital. Please go ahead.
Yeah, hi, sir. Thanks for the opportunity. Just wanted some clarity on this Buehler Motors order. So in the presentation, you mentioned that you're doing a capex of 110 crores. So what would be the revenue potential, and is this a part of the 300 crores or this is on top of that?
No, the 300 crore was the business. 110 crore is capex. So I think if I am understanding correctly, there are two different numbers. 110 crore of capex, what we have announced, that can generate potentially capex of 400 to 500 crores over next 4 to 5 years. This is what we said last quarter when we have entered into the JV. Yeah, so anything else?
So is asking is on top of it.
Okay.
No, that is separate. So
Yeah,
capex, that is capex, this is revenue. So that would separate things.
Okay, understood. Thanks. That's it from my side.
Thanks, sir.
Thank you. Due to time constraints, that was the last question. I would now like to hand the conference over to Mr. Sunil Bohra for closing comments.
Sorry, I think maybe we could take one more question. I think we have still 2-3 minutes.
Sure, sir. We have the next question on the line of Komal Lada from Yellow Jersey. Please go ahead.
Hello. Firstly, congratulations for the good set of numbers. I just wanted to ask, like the two-wheeler hasn't grown that much. So what might be the reason and what can we expect in coming quarters?
No, it's very difficult, Komal. We normally don't comment on what the industry volumes are going to be. I think it's best answered by our customers. So we will not like to comment on behalf of our customers in terms of the industry volumes. I hope you won't mind it.
Okay, thank you.
Thank you. We can take one more, if okay.
Yes, sir. Sure. We have the next question on the line of Shashank Kanodia from ICICI Securities. Please go ahead.
Yeah, good evening, sir, and congratulations. Always outrunning expectations.
Thank you.
So I just wanted to check, is there an element of stocking at the customer point for any of the products that you manufacture? So basically driving the point that going forward.
Sorry, could not make out a question.
Yeah, so I just wanted to check. So is there any element of inventory being stocked up at our customers for any of the products that we manufacture? So going forward, will our growth rate be at par and plus the OEM growth rates, or there could be a lag effect to that?
There is no possibility, Shashank, that our customers will be stocking our product. I don't think our product are scarce. Customers will build inventory. Our customers, they have milk run. Some of them take supplies 2 times, 3 times a day. So I won't say that our customers will be stocking up inventory for our products at all.
Right. So there could be no lag effect to the OEM growth going forward, right? So obviously we outperform the content wise, but there should not be any lag effect, right?
Absolutely.
Sure, sir. Thank you so much, and wish you all the best.
Thank you. Thank you, everyone. So,
Yes, sir.
at the end, so I would like to thank everyone for joining on the call. I hope we have been able to respond to all your queries adequately. For any further information, we request you to please do get in touch with us. Stay safe, stay healthy, and thank you once again for joining with us.
Thank you. On behalf of Minda Industries, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.